Hello, chart watchers, and welcome to this Friday, April 27th Market Watchers Live show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, the market jumped early in the day. We had a number of really excellent earnings reports, especially from the NASDAQ 100 companies out yesterday after the bell. We got off to a nice start. We had GDP numbers come out this morning. We'll talk about that in a minute. But the Dow Jones Industrial Average currently down 63 points. The S&P 500 is flat. The NASDAQ, after a huge move up at the open, has pulled all the way back and is now in a negative territory, down 5 points. And the Russell 2000 also up earlier in the session, now down 5 points. The 10-year Treasury yield continues to retreat off its high above 3% that we saw on Wednesday. We are now back down to the 2.96% level. Volatility index, which had gone back down in the low 15s earlier today, has climbed back up to about 1630. Utilities leading the advance today. And with the good GDP numbers, we've got consumer stocks also doing well. Consumer discretionary, you can see, even though it is off the high, is still up about, maybe about 0.6%. Then you've got consumer staples also building off of its recent strength. Energy not doing so well today. We'll talk about that a little bit. Two big earnings reports that came out yesterday after the bell. Amazon with a huge gap up. They just blew out their numbers. Intel did the same, huge gap ups. But one thing that's been kind of a common theme here in earnings season is companies that are gapping up with earnings are really struggling to hold on to those gains. And you can see those black candles on both Amazon and Intel. They are still up for the day, but they have given back quite a bit of their opening gains. And with that, let me bring in my co-host, Aaron. Happy Friday, Aaron.
Happy Friday indeed. Do you have some plans for this weekend?
Golf is always in my plans. So probably going to be doing some golf. Next weekend, the PGA Tour comes to Charlotte.
Oh.
So definitely be trying to get out there to see some of the PGA players. In which I was out there. But that's an old pipe dream.
It's my mom's birthday this weekend, so we're gonna spend some time with my mom and dad. So that means I get to talk shop with my dad. So I'm looking forward to it.
Well, I don't know. He's bearish. I think I might stay away.
Yep, that's why we're gonna probably get along this weekend.
Yeah. He may turn out to be the right one in all this before it's over, no doubt. Mm-hmm. We do have Grayson Rose with us from StockCharts for everything StockCharts in just a bit. Grayson, how are you doing today?
I'm good, guys. I'm shocked. Tom, you're playing golf this weekend? I didn't know you were a golfer.
Yeah, it's a rumor.
Bowley talking about golf. Something's new.
Yeah, golf and cornhole.
Golf and cornhole. There you go.
That's my idea of a good Friday evening. Anyhow, what do you got for us today? I know we're going to have you back in about 10 minutes, but do you want to give us a sneak preview?
Sure. I'm going to come on back here in a couple of minutes, like Tom said, but I'm going to run through what we call our free tools page. It's a unique page because it's sort of the landing place for free users. And if you're a free user and you're not using that page, you're definitely going to want to check out this segment. But it's also a great resource for members. So it's really a valuable resource regardless of whether or not you subscribe to StockCharts. So I'm going to run through that page, show you some of the features that are there, and make sure everyone's aware of everything you can access from our free tools page.
All right. Well, you're going to show me something new then, because I don't use the free tools page.
Tom, I'm always showing you something new. You got a lot to learn, my friend.
I'm just going to stay out of this right now.
I got time to learn. There's no doubt about it. All right, we're going to bring you back in a few minutes, Grayson.
Sounds good.
Let's let Aaron take over, go through the announcements for next week, and
absolutely, it's going to be a busy week. It's going to be a great week too. I'm really looking forward to next week. So the first lineup on the page for our weekly schedule is, of course, the end of the month is going to be arriving next week. So Tom's going to do a seasonality report, let you know what to expect in May. I'll be going over the monthly DP charts the following day that have gone final. Everybody has requested it. Tom McClellan will be back. He will be with us on Wednesday of next week. And Thursday, another most requested guest, Bruce Frazier, Mr. Wyckoff, will be with us the following day on Thursday. So it's going to be an amazing week. I'm very much looking forward to it. And as for today, we have an exciting show as usual. We'll be starting with everything stock charts. Grayson just gave you a little bit of a preview of what he'll be talking about. Then Tom and I are going to go through some technical scans, and we have the 10 and 10 to 1. The first stock already lined up is Louisiana Pacific Corp LPX. And finally, we will finish. I'll give you the sentiment update, and you can see what sentiment is telling us. And it's right in line with what I'm thinking. So I'm looking forward to sharing it with you.
Awesome. All right. Well, let's just jump right in here because we got a bunch to go over. There was some big news out this morning, pre-market, in case you're just tuning in. You can see the 10-year Treasury yield has actually pulled back a little bit today. It is down around 2.96%. This is kind of what I would have expected, though, because if we jump out and we look at a long-term chart on the TNX, you can see that this 3%, it's actually up around 305. This is a pretty significant area that we're going to be negotiating. So from a long-term perspective, you can see we got a double bottom. That would be really important, taking out that high. So I think the 305 area is something to keep in mind to the upside. We just got up to about 303 on Wednesday. We pulled back. I'm now looking for maybe a little bit of support closer to 290. I mean, maybe we get back into this 285 area, but I'm thinking 290 to 305 is kind of an expectation of a trading range for the 10-year Treasury yield. So that's what I'd be looking for. At 8:30 this morning, we did get the first quarter GDP. It was the initial reading, up 2.3%. Market was only looking for a rise of 2.0%. So we did see a little bit stronger growth in the GDP than was expected. And then at 10 a.m., April consumer sentiment came out at 98.8. Market was looking for 98 even. So we did get a couple of really nice reports. And I'm going to take you into the sector summary because this is where I like to start the day anyway. And when you take a look at the sector summary, you'll see the utilities leading, and there are both of the consumer sectors. You've got the consumer discretionary or cyclicals. You can see rising 0.71% at the moment. And then you've got consumer staples, which have really taken it on the chin relative to consumer discretionary. And one chart that I always look at, and that you can see we have been in 2018, money is definitely rotating more towards discretionary. And that keeps me somewhat optimistic about the market, because if the market was anticipating weakness ahead, why would we go into companies like Amazon or Starbucks, or maybe Starbucks isn't a great example because it's down on earnings today, but those types of companies, the retailers, the restaurants, the home builders, the autos, all of those stocks are, they represent companies that sell us things that we want, not things that we need, but things that we want. And so if those companies are doing well, it's generally a sign that the market is anticipating economic strength, or we're experiencing economic strength. So, and maybe a combination of both. So I still am pretty bullish looking at the just the way that these two sectors have been performing relative to one another. But you can also up here change the intraday, which just tells us what's going on today. And we can look at 1 week, 1 month, 3 months. 3 months is interesting because it was about 3 months ago that all of the selling and consolidation began. And before I pull this up, you need to know that during weakness, the market does tend to rotate towards defensive areas. It's not unusual to see that at all. I'm not too concerned when I see money rotate towards defense when we're in a period of consolidation or weakness. What bothers me is when the S&P is making new highs and money is rotating into defense, because that's telling me that defensive areas are leading the advance to the upside, and that is normally not a good sign. But anyway, let's take a look at the 3 month, pull it up here, and you'll see utilities leading. But what's kind of interesting is consumer staples, a defensive area over the last 3 months, is by far the worst performing group. It's really a mix when you look all over the board. Technology hasn't been hit that hard, even though it's had pockets of weakness, and certainly internet stocks and semiconductors have had their own shares of some short-term weakness. Overall, technology's held up fairly well, down only about 4.5%. But utilities are leading. Again, that's not too surprising. One thing you may not have realized, though, and we've talked about it on the show here recently, if we look at the 1 month chart, look at how much energy is outperforming the rest of the sectors. Just over the last month, energy is up almost 10%. That's a good year. And yet energy's been able to pull that off in just 1 month. But you look at the other gains across the other sectors, and they really pale in comparison. And if you sort this by scooter, you'll see that energy is now the top sector in terms of scooter rank. So consumer discretionary right beneath it in second. And then you've got technology. And then, of course, we have a pretty big drop off on the rest of them. Financials is, to me, probably the most surprising because we have had such a strong move to the upside in the 10-year Treasury yield. You'd think that financials might be doing a little bit better than they are, especially the banks, but that is not the case right now. If we pull up the XLE and we take a look at it, you'll see that it's actually struggling today with this move lower. It's down about 1%. But if you're going to own these ETFs, it's really important to understand what you own. And I'm going to give you a quick rundown and pull up these charts quickly on the stocks that make up the majority of the XLE. First of all, ExxonMobil is roughly 23% of the XLE. So if you don't like ExxonMobil, you probably shouldn't be trading the XLE. ExxonMobil has been performing a lot better. Now today it's down. It did report earnings and it is struggling, gap down earlier, but it does have a hollow candle. And I think a close back up above that 20-day moving average would be okay. But when you're looking at where ExxonMobil stands currently, $78 relative to its high back at the beginning of February, $88, you can see that it's actually trading closer to its low over the last 3 months than it is its high. And so the XLE is as strong as it's been. It's really being held back by relatively weak ExxonMobil. That's 23% of the XLE. Then you take a look at the CVX. This is another 17%. Now this stock I think looks much better than ExxonMobil. I think that the uptrend is much clearer. We are breaking out again today, and we're much closer to the high that was set a few months ago than we are the low. So I think CVX is doing better. But again, this is 17% of the XLE. So you can already see that ExxonMobil is holding you back if you're owning the XLE, while CVX is beginning to show you some nice strength. A couple of other stocks, or a few other stocks that have a pretty big stake or a big part of the XLE. Schlumberger, it continues to trade above its 20-day moving average, but like ExxonMobil, it is still residing closer to its recent low than it is to its recent high. But as long as it continues to bounce off this rising 20-day, we should continue to see strength in that XLE. COP, which is ConocoPhillips, this is one of the stronger areas. Unfortunately, it's only 5% of the XLE. But here you've got a big breakout, and you can see as we go through these stocks, these various components, which ones are really leading the energy group to the upside. Here's EOG Resources, another stock that's on a tear in April, and it's getting very close to a key resistance level established back in January. Then we got OXY, which is Occidental Petroleum, another one that's been on a tear in April. This is, 20% move in 1 month. Part of it certainly relating to the strength in crude oil prices, but this one did break out above its January high and continues to trade exceptionally well relative to many of the other energy stocks. Halliburton also moving higher. But one thing you can kind of see as a theme here is that many of these stocks that were trending lower for a while are now trending above their rising 20-day, and most of them have this 20-day now above the 50-day moving average. So the whole, the whole picture, I guess, that's not the word I was looking for, but the picture has definitely changed for energy and many of these components. We'll take a look at Phillips 66, PSX, another one, big move up, breaking out above the January high. And the last two, by the way, these 10 stocks that I've just shown you represent 75% of the XLE. So if you don't like these 10 charts, you're not going to be too happy with the XLE. But as you can see, I think they're performing pretty well. Valero, one of the best of the bunch, also off of its April low, is up about 20%. So really nice move. And it broke out above the January high long ago, 2-3 weeks ago. And finally, I think this is Marathon MPC, Marathon Petroleum, another one breaking out. Very nice. I like this pattern, just the fact that it pulled back, came back up, tested the high, put in this little handle on the 20-day, and then broke out. PPO looks great. It's overbought, but another one that looks strong. So if you're wondering about the XLE, this is why the XLE is performing so well. Now, a number of earnings reports came out, and we'll try and talk about them a little bit later. I do want to bring Grayson in here in just one second, but let's take a look at the NASDAQ 100. Actually, let's take a look at the NASDAQ first. I'm going to pull it up on an hourly chart, because right now the weekly or the daily chart is just showing a lot of consolidation for the last 3 months. So instead of looking at the daily chart, because we're not breaking out, I try to look at these little mini trends on the hourly chart. And you can find some of these trends where we move below the 20-period moving average, and then finally we'll break out and start trending higher, and then we break down, trend lower. One level that I think is really important as we go through here is this 7,100 area. And we've talked about this on a couple of occasions already. You can see early March, that was where we pulled back to. We had a double top, actually really like a triple top at around 7,100. I could pull this up just a little bit right about to there. But you can see that the struggle at 7,100, we break above, we hold 7,100. The last time we went below 7,100, now we come back up and we've pulled back. And right now we're trying to hold 7,100 again. And I mention this because right now the 20-hour EMA is at 70.93. So if we can hold and go back up and move back toward today's open, I think that would be really bullish, especially given that that Monday is the last day of April, and then we move into early May, which tends to be a very bullish time for the market. So I think this is worth following. As long as we hold this rising 20-hour moving average, I'm not too discouraged by the opening gap and pullback. That's typical market behavior. But I do want to hold that rising 20-hour EMA. And with that, I'm going to bring in Grayson. Grayson, I'm going to let you take over and show me something I don't know.
Sure, always. Well, hey, you doing the sector summary stuff is actually kind of a good segue into what we're going to be talking about today, which is the free tools page and basically how to access some of those tools. For anyone who's watching the show and who's saying, wow, I'm new to StockCharts, Tom's using the sector summary page, it seems like an incredible feature, but I don't even know how to get there. I'm going to show you that today. So we're going to start here on the homepage really quick. Our tabs across the top, actually, we recently changed this. So might be a little bit different for some of you, but free tools is this tab over here that we're going to cover today. It used to be called free charts, but it's now called free tools. So we're going to dive into the free tools page. And the thing that I want to stress here is this is obviously a fantastic landing page for free users. If you're a free user of the site, this is kind of the hub. This is where you should be going on a daily basis. We do get a lot of people that come to the site and they plug in a ticker. They say, I want to look at a chart of Apple. They go to the homepage. They plug in Apple up in the create a chart bar here. And then they go to the workbench, they look at the chart, and then they leave. They never really explore anything more. So the free tools page is really all about getting you to explore everything else that's on StockCharts, because there is a lot of stuff here. Aaron and Tom will both attest to that. But anyways, the free tools page is a fantastic resource if you're a free user. The thing that I want to stress, though, is it's also a really good resource if you are a member. Now, I'll click over to the members dashboard really quick just to show it. This is the members dashboard. Anyone who's a member, this is where you come when you log in. This is the first page that you see. And a lot of the resources that are on our free tools page are covered over here in what we call the control center. It actually tells you your service level right here. But a lot of these tools are covered over here. But the free tools page also has a lot of those tools accessible for you. And it's kind of laid out in a different way that's maybe a little more friendly. There's kind of less going on. So what I want to show you today, on the left side of the page, kind of the left 2/3, we've got all of our primary charting tools. Obviously, Sharp Charts up here at the top is the big guy. Point and figure charts are also over here. But then we've got sort of a lot of our second level charting tools, which are fantastic tools. If you're not using them, definitely recommend you go and sort of take a look at some of those. Perf charts is one that, Tom, I know you use perf charts quite a bit. And you both, Tom and Aaron, use Candle Glance on the site or in the show quite a lot as well. But perf charts and Candle Glance, these are two of our next most popular tools. Seasonality and gallery view. And the great thing about this page is we've got our predefined charts. We do create all of these predefined perf charts, predefined Candle Glance groups, and those are accessible in just one click right from this drop-down menu here on the free tools page. So it's a really easy way to come in here and access some of these tools. Market carpets, RRG. We're going to have Julius on in a couple weeks. He's been on before, and you know, he's always talking about RRG. You can launch an RRG chart right from there. And one that's that not a lot of people use, but it is a fantastic tool, is our dynamic yield curve, which is a really interesting way to actually visualize the yield curve, visualize interest rates, and compare that to what the market's doing, what the stock market's doing. So our tools are laid out over here on sort of the left 2/3 of the page, like I said. But over here in the sidebar, we've got a ton of links to some of our other powerful resources. So obviously our charting tools are up here, so you don't have to scroll down if you do want to click into some of those. But what Tom was just showing, the sector summary page, that's accessible from right over here in our summary pages area of the free tools page. So we have a market summary, a sector summary, an industry summary, and our scooter reports. Those 4 pages sort of comprise what we call our summary pages. And again, this is sort of a top-down sort of organization. You've got market, you drill down into the sectors, you drill down into the industries, and you drill down into individual stocks. So these summary pages are really, really crucial. Tom was highlighting the sector summary page. I'll click over here to our market summary page really quick for anyone who's not familiar with this page. But it's a really broad overview of what the markets are doing. We've even got, you know, international ETFs on here, U.S. bonds, U.S. commodity groups. Really, really a powerful page. And that's accessible, again, right from the free tools page. Below that, we've got this group for, it's kind of a catch-all, but it's additional tools and reports. So these are some of our tools, our features that get kind of lumped together here, but they're incredibly powerful resources. The 2 that I really want to highlight for you today are Predefined Scans and Predefined Technical Alerts. Now, a lot of people, whether they're free users or members, forget about these resources, and they are incredible resources. We'll drill into, for example, Predefined Scans. So what we do, as a member, you can create your own custom technical scans, and you can put your own criteria in there, scan the entire market for whatever you're looking for. But as a free user, what you get access to is our predefined scan results. So we take some of the most popular scans that people run. For example, new 52-week highs. That's one that we get all the time. We get a lot of people writing in saying, how do I create a scan for new 52-week highs? Well, the simple answer is you come over to the predefined scan page. You click this number here. You can see right now we've got 178 stocks that are triggering that new 52-week high scan. And you can click right into there and you get a list of all 178 stocks. So it's a really, really easy way to sort of run scans without having to actually go in and create them yourself. If you're just looking for sort of out-of-the-box, easy scans, popular scans, really common ones, this is a fantastic resource. We've even got candlestick pattern scans that we run and PNF patterns. These are a really popular one, a great way to find stocks. I love the triple top breakout. I use that all the time. So this is a very powerful resource, the predefined scan page. And again, you go to the free tools page, you scroll down here on the side and you click predefined scans. Similarly, we do the same thing with technical alerts. So again, as a member, you can create your own custom technical alerts. You can save those in your account. You'll get notifications by email, notifications on the site. We'll even text you notifications when those alerts trigger. But we've also got these predefined technical alerts that go off throughout the day. You can see all of the things that are running here in the last couple of days. And the predefined technical alerts page is a really good place to go and sort of see what's going on. It's actually, whether you're a member or a free user, it's an interesting page to kind of glance over on a daily basis and say, oh, okay, what's going on? NASDAQ crossing above 7,100. That's an interesting trigger. So these predefined alerts can be really, really helpful. And what's interesting too is that you can actually get these on your members dashboard. I've actually set this up. It's an option in this dropdown. So the way that I've configured my own members dashboard, when I come here, I actually get the predefined alerts in a panel right here. And so I track that on a daily basis. I'm always curious to see what's going on by reading these little predefined alerts. So it's a helpful feature. Lastly, we'll cover up just a couple things on the free tools page. Again, other tools that are awesome, really helpful, and very popular with our users. The historical chart gallery is a great way if you're more of a long-term investor. We've got some really interesting charts in here. One that's always interesting is the 4-year presidential cycle. can actually go back and look at sort of how the markets have done in different presidents' terms. So that's an interesting one. So our historical chart gallery is a good resource to use for sort of longer term investors. The ticker cloud is an interesting way to see what's really popular right now. These are the most requested symbols on the site right now. 200 most popular symbols on StockCharts right now. So it's an interesting way. You know, when something has a big earnings report, you'll see the size of the ticker grows. Apple is kind of a constant up here. It's always funny. You always see Apple up there because it's so highly requested. Amazon here, you can see that over there. But the ticker cloud is interesting to sort of keep an eye on and see how tickers sort of grow and shrink over time with interest and, you know, with what's going on in the markets. So, and finally, we've got some educational resources down here. Now, I've covered all of these different tools, but the educational resources honestly could be the most important part of this page. We've got obviously our blogs and market commentary. For those of you who follow the show, you're probably already following the blogs. Chart School, though, is our educational resource that's sort of timeless content, a lot of helpful, instructional, informational articles about investing. It's a great place to go if you're sort of new to technical analysis or maybe new to the markets. Our support center is right here. You can get answers to all of your questions, frequently asked questions. You can contact our customer support team. It's a great way to get help with anything that you're confused about or anything you have a question on. And lastly, our instructional videos page. This is one I want to highlight really briefly, and then I'm going to hop off here. We have all of these instructional videos that we've put together. Actually, Arthur Hill has done most of these. So you can come on here and you can watch Arthur sort of fly around the site, explain how things work in greater detail from more of an instructional standpoint. You know, it's not market commentary here. It's making sure that you understand how to use the tools most effectively, why the tools are there, what they do, how to find them. That's a key component. So our instructional videos page is a really great resource, and you can get to it from the free tools page. You can also get to it actually by going to stockcharts.com/videos. So anyways, that's what I wanted to cover today. You know, a lot of people probably already know about this page and they've poked around it quite a bit. Maybe they spend a lot of time on it on a daily basis. But the key here is that for anyone who's new to the site, or for those of you who are sort of using it in a particular way, maybe you're spending most of your time on the members dashboard and you never really pop over to the free tools page, it's a fantastic resource. It's got a lot here, a lot of value, and it really lays out all of the tools and features of StockCharts in a different way. Now, the last thing that I'll highlight too is our sitemap. If you want sort of more of just a text-based tour of the site, down here in the footer, you can see our sitemap. And we do have this, and this shows you everything that's here. It's got lots and lots of links all over the site to the different resources that we have. So you can scroll through the sitemap and sort of get an understanding of how things are organized, how things are broken down, where they are, all of that. So the sitemap actually is another really great resource if you're going around StockCharts and trying to find, you know, tools and see what's here. So with that, I'm going to hop off.
Hey, you did do something I didn't know.
What's that?
I didn't realize that you were a big point and figure triple bottom or triple top.
The triple top breakout. Yeah. No, it's a great way to find new opportunities. You know, it's a different way of looking at a stock. It's not the traditional charting method, but again, that predefined scans page, there's just so much here. Tom and Aaron, I don't know if you guys use this. I mean, you've got your own custom scans that you run, but there's a lot here. There's a lot here, and it's really great stuff. I mean, another one that I use is parabolic SAR buy signals. That's one that I really like to keep an eye on. There's so many here, but a fantastic resource if you're a free user or if you're a member. Obviously, once you become a member, you can do a lot more with these scans. And actually, the predefined scans as a member become a really great resource because you can sort of jump in and pull the criteria. If you want to start with a new 52-week highs scan and you want to build some stuff on top of that, you can actually go in here and you can grab the scan code. I think it's under available actions. You can actually grab the scan code and click here to edit this scan. There we go. So if you do that, you'll actually be able to start with that scan criteria and sort of build off of it. So it's a great place to go for starting places for scans, great place to go for ideas, great place to go to find new opportunities. A lot going on the Predefined Scans page.
Wow. Well, I tell you, you just gave me a great segue into technical scans because that's exactly where I'm going to go. And you just stole my thunder.
There you go.
I'm going to leave.
I stole your thunder.
Yeah. I don't have anything else to go over now.
Hey, it's Friday. You go play golf now.
I think we'll find something.
But it's always great to hear from you, Grayson. And by the way, we had your dad in here the other day. That was
I know. What is this, like Rose Week or something? This is crazy on Market Watchers Live.
Run for the Roses is coming up. You know that, right? Couldn't help it. Had to have one.
Had to get it in.
Thanks
for having me, guys. And I'll be back in a couple of weeks to show you some new stuff.
Sounds Excellent. Good. Have a great weekend there, Grayson.
You too. Take care, guys.
Great. And there he goes. Always good to have Grayson on here. He's always trying to share something. He said before that's his goal, is to try to do something that I'm not aware of. Of course, he doesn't realize how easy that is.
Oh, come on now, Tom.
No, I'm serious. When it comes to the site, and I think everyone out there listening is going to agree with me because there's so many things on the site. It's so powerful. And anytime that he comes on, or Bill Shelby or Chip comes on, they start going over something. It's like, wow, I didn't realize that you could do that.
Yeah. I know I look at the site regularly and find something I haven't used. So it's great that we have these segments so that we can learn more too.
Absolutely. Well, we are going to go into technical scans. I'm going to go ahead and start it off. Grayson did just steal some of my thunder, but that's all right. I still got a little thunder and lightning left over here.
All right.
He didn't take it all. All right. Well, let me go ahead and share my screen for everyone. And I'll show you how I use the predefined scans. So from your members dashboard, if you scroll down here and you see the predefined scans, and by the way, I think if you're not familiar with this little gear shift over here, this is where you make sure that your scans and alerts are showing up on your member dashboard. So if you're looking on your member dashboard and scrolling down and you don't see your scans and alerts, you need to go over and make sure you check this little gears thing and see if you have your scans and alerts checked. If you don't, you need to check them, update, and then they will appear. So anyway, you scroll down. Here are the scans. I actually have a couple of scans. Now, this is an account I just used for Market Watchers Live, so I don't have all my personal scans on here, but I do have a couple. So I'm going to, how do I want to do this? Tell you what, I'll take a little different angle. I'm going to pull up a high volume scan. And what I can do is I can edit it. Now it's going to come up in this basic, but toward the bottom here, I can click on Advanced Scan Workbench. So this will show you how it's set up. And all it is, here are the basics. The daily simple moving average of volume for 90 days, I have set up greater than 300,000 shares. So I want to eliminate, all of the smaller companies that maybe don't get as much volume. I don't like illiquid stocks. So I use 300,000. You probably could be okay with 100 or 200,000. I don't know. 300 is what I tend to gravitate toward. And then also the daily simple moving average over the last 90 days of the closes has to be above 1. I'm not really in a penny stock kind of trader, so I tend to get away from that. I'm going to lessen it here and just make it greater than 5. And then the daily volume, what this scan is set up to do is to find stocks that are trading unusual amounts of volume today. Not the highest volume stocks out there, because many stocks, Intel, for instance, trades millions of shares every day. So if I just did it based on volume itself, Intel would come up. All the usual suspects would come up. What I want to find are companies maybe that normally trade 300,000 shares that all of a sudden today are trading 1.5 million. So that's going to kind of point me towards stocks that are in the news or maybe making technical breakouts and that sort of thing. So here, what I'm going to do now, this is just my default daily volume greater than simple moving average over the last 90 days. It's at least 40% of the normal volume. Now, what I normally do is run this scan at 10 a.m. So Eastern. So if in the first half hour of trading, a stock has traded already 40% of its normal volume, that will alert me very early in the day that this is a stock maybe that I want to pay attention to. But we're way past the 10 o'clock time frame. We're almost halfway point of the day. So I'm just going to up it to 0.75. And if I was going to run this against all U.S. stocks, I'd probably change it even higher, because this is going to bring up a ton of stocks. But I'm going to limit it, and I'm going to limit it by choosing an index. I'm going to choose the S&P Small Cap 600, because again, I'm interested in some of these small caps based on the fact that we've gotten the dollar breakout recently. I think small caps could make a sizable run. So I've been trying to focus more on small caps. So then you just click there, very easy to select your scan component and add it. All right, so now all of a sudden, I'm only going to run this scan against the S&P 600 stocks, the small cap stocks. Now, once you get everything set up, you can click check syntax. It's telling me everything is correct. That's a shocker. And then I run the scan. Now, from here, it's telling me I've got 27 stocks. And that's a pretty manageable list, 27 of the S&P 600. So it's about a 5% sample. I'm going to go ahead and replace an existing chart list with it. For me, I have a high volume scan result folder that I like to drop them in, because after today, I don't need to save them. Next day, if I run it again, I just drop the new ones in and replace. And so now you can see the stocks. I can sort these all kinds of different ways. Right now, it's sorted by percentage change today. So you can see the small cap companies that are doing extremely well. You go down to the bottom, you can see the ones that aren't doing so well. I could sort it by scooter if I'd like. I mean, there's a lot of different ways that I could do it. I could pull up the candle glance, which, you've seen Aaron and I both use quite a bit here on the show, and as Grayson mentioned earlier. So this, you could take a really quick look, because there are only 27 of them. They all come up on one page, because you can get up to 30 on a page. So this would just be a real quick look. I might say, hey, wow, look at that nice breakout on Shake Shack last 2 days. Maybe McDermott, look at that volume picking up, seems to have broken a downtrend. That might be something that kind of captures my attention. Big gap up on Hub Group, came down, filled the gap, might be ready to turn back. I mean, just all kinds of different things. Eli, Callaway Golf. Well, I know how that one's breaking out. It's probably all the Callaway golf balls I've lost so far this year and had to replace. Callaway breaking out, that might be of interest. BJ's Restaurant, we talked about the restaurants and bars. You're getting a breakout there. But it's not just about bullish charts. Look at BHE here. It's breaking down on big volume. The only real criteria here that I'm using is the volume today. So when I look at the charts, I don't have to think about volume. My combination of, or my favorite technical indicator is the combination of price and volume. But when I run a high volume scan, I already know the volume's there. I really don't even have to pay attention to the volume. All I have to do is look and see what's going on with the price action. So that's one of the reasons why I really like this. Now, if I do this and look at it in 10 per page, then I get my whole setup the way I like to look at the chart. And if I find one let's just pull up Abercrombie here. And if I look at Abercrombie and I want to look at it on my relative chart, literally it was one click to get over here and then another click to pull up my relative chart. And boom, there I have it. So Abercrombie's been doing extremely well, and you can see it recently broke out, even though the apparel retailers group has been strong, but it hasn't broken out yet above January. So I know before I even look at the relative chart that ANF is really performing well relative to its peers. And that's what this tells me right here. ANF : the industry group. And you can see it's been trending higher. Now, it has pulled back recently relative to the group, but that could be presenting a nice opportunity. I mean, after we broke out back here in, late January, we struggled for about 6 weeks or so on a relative basis. Didn't really go anywhere, kind of went a little bit lower. And that led to some very strong action. So sometimes these pullbacks present some nice opportunities. Here was that pullback. And look at as we pulled back, we got back to gap support, price support. And so when you're looking at the relative strength, you say, well, maybe it's starting to lag a little bit. Well, that's okay when a stock makes a good breakout on heavy volume and then simply consolidates that move. This is kind of what I think is going on right now with Abercrombie. We had a huge move to the upside, saw tremendous relative strength, and now we're consolidating and pulling back. If this gets back closer to set 24 and a half, That would be really interesting. We got 25.14 today. And remember, this stock was up near 29. So as it pulls back, your reward to risk on a trade like this is really strengthening. So, that's a couple of different ways that you can use it here. I'm just going down these 10 stocks. But you'll see some that look really good that are trending higher. And then, as I said, some not so good. We can see this one trending lower. Here's one that broke down yesterday, rallying a little bit, but it's, maybe going to fill gap resistance, and then I'd be careful. Here's one that potentially is breaking down, BHE. I think I mentioned that one earlier. And then here's BJRI, BJ's Restaurants, continuing to move higher. Really nice volume coming in. So you see a whole mix. This one's just been sideways consolidating, California Amplifier, but it is having an awful day today, down 12%. Look at the volume. See that volume relative, what it normally trades? That's what this scan will do for you. I don't have to pull up charts based on price action and then look at the volume. I already know the volume is big. And when I see a breakdown or potential breakdown like this, not good action at all. Now, what you might see on some of these is maybe a stock like this opens at 21 above support, goes down to 19.5, looks like it's breaking down, and then comes back up and prints a hammer right at price support. A lot of times that's a great time to get in with relatively low risk. But again, we could scroll through. Here's Eli, ELY, Callaway Golf making the breakout. Again, you can see the volume picking up. Anyway, that's basically what I had for this particular segment. Just wanted to show you how you can take a scan and, cater it really to what you're looking for. In this case, small cap stocks. What do you have, Aaron?
Absolutely. So I thought I would go into, I usually go into those predefined scans, but today I thought I would talk to you about, let's see, I want to go to there. I wanted to talk to you about my scan that I ran through it, I think on a couple of days ago, a day or two ago. It's, right now, Carl and I are very bearish on the market. So I'm not, honestly, when I see weakness and I'm looking for more downside, that's the place that you want to short on the short side. So I generally am always looking for buys. But there are times where I want to find a good short opportunity, and I only do that in a weak market. So I thought that I would show you that scan. Just again, I'll run through it, and then we can look at what some of the I call it scan for dogs, because I'm looking for doggy stocks that are not doing well, that haven't been doing well, and try and jump onto that weakness before it gets before the momentum picks up a little too much to the downside. So this particular scan right now, I have it set up just to look at the S&P 500, 600, and the NASDAQ. And then I'm running the same PMO setup. And this is where I'm looking. Typically, I'm looking for a PMO that is below its signal line and has been rising for 3 days. But now I'm looking for a dog. So I'm now looking for a PMO that was rising, but is now turned back over. It's sitting above its signal line. So we still haven't gotten that sell signal, but it's been going lower. Momentum has been falling for the last 3 days. And I also am setting it up that I have a really negative setup for the EMAs. So I'm going to have the 20 below the 50, and I'm going to have the 50 also below the 200. So this is setting it up that the fastest EMA is on the bottom, slowest on the top, and that is about the most bearish configuration you can get. Then I decided, what the heck, I'm going to add the scooter less than 75. And I think I went in and ran this earlier, and I had actually quite a few results. So I'm actually going to set up the scooter to less than 50. And let's see if we'll check the syntax. And let's see if we get any results when we scan for dogs. 17. I find it interesting too when I go through this, where are these dogs lying? What sectors are they lying in? The dogs are lying in some defensive sectors right now. Industrials, materials, those are a lot of times you'll see those do well in a bear market. So I find it interesting that I'm seeing the weakness here, and that might actually give me some pause if the weakest stocks are sitting in these defensive areas, that tells me that maybe the market isn't quite as weak as it might be. But for the sake of this exercise, I'm going to go ahead and look just a few of these. I'm first going to go ahead and save them into what I call my scan dump. And I think Greg Schnell was the one who showed me that one. All right, let's go to the scan dump. And we're just going to drop those in there. And now I can manipulate. I couldn't manipulate it before. All I could do was see them. So now I can actually manipulate them. And I'm going to look at candle glance. That is, I'm telling you, this is one of the strongest and best tools on StockCharts. Not only is the scanning amazing, but to be able to look at your results in the way you want and see what's going on the chart and see a bunch of them at the same time, it's invaluable to me. It helps me scan and sort through what I'm getting and be able to see that right away in a candle glance. I just love that. And if you want to set up your own candle glance, because obviously this is a custom style that I had set up, but if I go to one of these others, this is going to give me the StockCharts default. But if you want to do like I do and have a custom style, all you have to do is when you go to your chart, fix it up, get all of the setup the way you want it to look on candle glance. And I will show you. And you just save it, that chart style. It's candle glance. And then you're going to get what you want there. So my candle glance looks like this. And that looks familiar, I would think, to some of you from where we were right here. So now I can see the PMO and what it's doing, etc. So what I'm looking for are really ugly price patterns and really weak PMOs, either in overbought territory, the PMO's turning down and overbought. For example, in this case, it's overbought, it's still below the zero line. So this tells me there's some serious weakness in this particular stock, DAKT. So I'm going to look at this just really quickly. And as you can see, we've seen it get really overbought, but in the last, well, for the last year, we're in overbought territory for the PMO. And so we are getting ready to see that sell signal. I look at the chart, though, I probably wouldn't be all that excited. I mean, the downside potential for a short still looks pretty good. But, we're already halfway down that trading channel that we're looking at between like 860 and 940. So, you could pick up some here, but your risk level is that it'll go back up and touch the top of that trading zone. So let's look at another, let's see, what do I have that looks interesting? This looks kind of interesting to me just because I'm seeing what could be a descending triangle, and that is a bearish pattern. I suspect if I put this into a solid line, that we might even have a double top. Let's check it out. Yeah, so we do kind of have a double top, but we clearly are setting up this sort of a descending triangle here, getting ready to have a PMO sell signal, well, just above the zero line. So that, again, weakness, couldn't even get up here into the higher points. So I'm looking for a short. So what are my, what's this look like as far as setting targets, etc.? Let me get this back here. So it's just, we're thinking opposite, right? I'm looking for shorts. I'm looking for where the target is on the downside. And, I'm looking at it right now, 21 and 22 clearly look pretty good as far as downside. Upside is around 25. So reward to risk here may not be all of what you want to look for, but the basic idea here is that you're scanning for dogs when you're looking for, you feel there's a weak market, and so you don't necessarily want to jump in on the buy side, on the long side. So you may want to dabble in a few shorts, and this is a way you can do that. I do have that that article available to you if you just go scanning for dogs. Whoops, adopts dogs. You go to blog articles, and there it is. Bear market PMO scan screens a few dogs, and I can show off my doggy, my daughter's doggy. So if you're interested in that scan, that's how you might find it. And with that, I think we'll close off our segment on technical scans. And let's take a peek here at our summary. You can see what Tom and I did and what stocks we looked at in particular. So for Tom, he went through the predefined scans. I just went into my scan to short and showed you exactly how to do that, and then the stocks that I went over as well. So I hope you enjoyed that segment. Right now, though, it's time to get started with that 10 and 10, Tom. So I'm going to get that ready right here. And today's 10 and 10. I have a few more to add, so I'm going to throw those in there. Let's see, IEO, AVGO, PHM, AEO, ILMN, MCRN, and Disney, and I see UAA. All right, so we have about 40 today. So 3 out of 4 of you are going to be upset that yours didn't get picked. So hang in there for us. So anyway, I'm going to look at all of these. Let's go ahead and we'll look at the RRG very quickly, just to give us an idea of which ones are of your requests, which ones are looking good and which ones aren't in terms of sector rotation. And here we go. I'm going to shorten the tail as Julia suggests. We'll fit it. And I'm going to, so here are some of those outliers. ABWN is probably going to end up on that list, and EXEL. We're seeing them going in the right direction in the improving quadrant. So I expect I'll be looking at those two in particular. Other than that, put your votes in, do your likes in the question room so that we can see which one's most popular, and that will be our second one. And with that, I'm going to pass it to you, Tom. Our first symbol, Louisiana Pacific Corp, LPX.
Okay, I actually pulled it up over a year basis, just to kind of look at a longer term perspective. And you can see that LPX back in early September really had a nice push to the upside on very heavy volume, which is what you want to see. And that prior area of resistance that we took out on this move later became really good support. And that's one of the things that we talk about. I know I talk about quite a bit. For me, there's nothing more important in the market than that combination of price and volume. You get the breakout on the one side with heavy volume, and then when you come back down, we did have heavy volume on November 6th, but we held the price support. We did it again a couple weeks later, and that has continued to hold. So I think overall, when you look at this chart, it continues to move higher from left to right, so that's a good thing. I would maybe pay attention to the trend lines. And again, trend lines are only as good as the number of points that they connect. In this case, you could maybe make an argument of maybe 2 or 3, maybe almost a fourth one. But $28, I would say, based on this trend line, becomes pretty important. And I could also draw another support line in here because $27.75 to $28 has been pretty good support over the past couple of months. So I'm going to say $27.75 to $28 is a stop on LPX to the downside. As it pulls back, though, you can see the RSI now has worked its way back into the 40s, which I think is good. I do think the reward to risk is building and favoring the long side.
All right. Let's see the most popular request in the chat room right now. The winner is AT&T. T.
Okay, T, well, it's just not been a very good last few months. 2018 has not been very good. We started kind of at a triple top at the end of December, and as we went into January, we did one day, early February, take out that high and then right back down, and we have been trending lower ever since. Earnings just came out yesterday. That was the reason for the big drop. I look at this now. You've got some gap resistance overhead at about 35 and a quarter. Go ahead and annotate here. So for me, I'd probably be looking at something in this neighborhood. That's your gap resistance. That's where we gap down from. You've got price support that comes in at that November low. And then as we continue down over the coming days, you're going to see this 20-day moving average continue to drop. I think AT&T now is stuck in this range in a downtrend. I'm not a fan of it. I think there are a lot of better places to park your money. It is a nice dividend payer, and if you're somebody who's been holding for a long term, I don't think AT&T is going anywhere. and I think it will continue to pay you nice dividends. But as a short-term momentum trader, this one's not appealing to me.
Okay. The next one, and it was an interesting one on the RRG, will be EXEL, Alexis Healthcare Biotech.
All right. Well, many of the biotechs are struggling. I will say that the PPO has turned up on this. I'm going to shorten the chart here a little bit. Let's go back to that 6 months. You can see that all the action, look at the volume picking up, and those 3 black crows right there. That's a bearish candlestick pattern and formation, and you can see that has led to a lot more weakness. If there's any good news here is that if we do move back down one more time to a new low and it's on lighter volume, we could see a nice positive divergence. So let me annotate the possibility. It is not in play at this point. There is no positive divergence. But what we could see is maybe the PPO coming back down slightly as we put in a lower price at some point down here in the future. So that's one possibility. In the meantime, as long as that PPO is putting in new lows on price lows, and I'll show you what I mean in just a second. Here's the latest price low, and look at the PPO where it was. It was at a new low. You get this sideways action. Sometimes that PPO turns up, but I look for that falling 20-day moving average to provide resistance. It has been so far. I'm not a fan here just yet. I'd like to see maybe one more low and a reversing candle print with a positive divergence, and then maybe I'd be a little bit more interested.
All righty. Let's see. The next one is going to be ABWN. I'm sorry, ABWM, Airborne Wireless Network. So sort of in the same area, but the RRG looked really interesting.
Well, the one thing that I didn't like about the RRG, and I think Julius mentioned this, is that it's so far over to the left that even though it's improving, it has been a very weak performer. And I think you can see that from the chart, where just over the past month, we've gone from, what, $1.90 down to 70 cents. So yes, it's starting to show a little bit of strength, but it's showing it within the confines of a pretty significant downtrend. And as you can see, this first test of the 20-day moving average is not working out so well on the stock. I'm not a fan. I think you're going to see this back down to that near that 75, 80 cent level. So I personally would avoid it.
All right. The next one actually came up on my scan for dogs, and that is Disney, DIS.
Yeah, Disney is one of those stocks where if you're in it for the long term, I'm fine with it. Short term, I think we got some issues still that we need to negotiate. And I'm going to pull up that longer term chart for, let's pull up a long term, monthly, 15 years. I think it's pretty obvious to see that we had a huge run on Disney from the low in 2009 to 2015, and we have been consolidating. I'm going to go ahead and annotate this one because I think from a longer term perspective, I still like Disney. I just don't like it in the short term. It needs to do some things to start to turn around. But I do believe that we are consolidating. And if you could get Disney down closer to 90, this has been a 3-year support area on Disney. So, while the weakness is bad in the very near term, and again, it's not something I'm interested in trading at this point, I do think from a longer term perspective, you want to at least take note that $90 has provided really good support in the past.
All righty. After Disney, I have Mr. Softy. We haven't looked at Microsoft in a while, and it is a popular request.
And they just reported earnings, which were blowout earnings, by the way. In fact, before I even annotate the chart, I can tell you what the numbers were. Microsoft, $26.82 billion in revenue. The market was only looking for 25.71, and bottom line, 95 cents versus 85 cents. And this is another one I'm going to pull up on that relative chart because I think this is really important. First of all, knowing that you're in a chart or in a group that is easily outperforming the S&P 500, and I'll demonstrate that here in just a second. All I'm going to need is the blue arrow directional line on this chart because you got that, which is Microsoft. This is software. This is Microsoft versus software. This is Microsoft versus the S&P, and this is software versus the S&P. When you get all 5 of these lined up where you're moving from the lower left to the upper right, you got a really good stock. And so I like Microsoft. Now, is it maybe a little stretched in the near term? And with this false breakout, let's see how we close today. We did go back and fill the gap after a huge gap up, and they were very deserving of a gap up, by the way. That was a really strong report that Microsoft came up with last night. But we did gap up above resistance, traded back down, filled the gap, and we're starting to strengthen again. Let's see where we finish. If we have this black candle, my guess is maybe we're going to consolidate between, let's call it 92.5 and 97.5, maybe for a bit. But I believe Microsoft goes higher.
All right. Next one I have for you is Millicron Holdings, MCRN, and they are in the industrial machinery industry.
Yeah, this is one that I think I had as a setup a couple weeks ago. And I can't remember now. It's been so volatile up and down, as you can see recently. I can't remember. I think this one actually was a winner, but then turned back. I don't remember. But there are some key levels, I think, to watch. First of all, yeah, you can see the industrial machinery group has been going down. That is not helping the stock. And it's over the past 2 months been underperforming its peers, and its peers are not doing well. So that is not set up well for Millicron, to outperform the S&P. In fact, we're seeing just the opposite. And you can see on a relative basis, its peers have broken down relative to the S&P 500. So there's a lot going on here. Things have changed for sure. I would be looking at right there should have been good support. We did make our initial bounce off, but we failed at the 20, broke down, went back, put in a double top, and now we've broken down again. You got the bottom of gap support right here. We need a turn pretty quickly on Millicron. If it doesn't turn and we close back near the low of the day, I would fully expect to see that 17.5 level come into play. So I want to see a reversal now. If there's one positive here, it's that as we've been selling off, the volume is much lighter than what we saw when it was being accumulated to the upside. But when you start making price breakdowns, I don't like making excuses. So I would be careful with Millicron at this point.
Okay. The next one is CubeSmart, and the symbol is Cube, specialty REITs.
Yeah, well, the REITs in general, actually, this one's doing really nice. I'm kind of surprised because you can see that specialty REITs are not doing particularly well as they've been falling. Cube, though, relative to the peers, have been doing very well. So this is a case of a not great industry group, but a really good stock within that industry group. We are testing major overhead resistance. If I owned it, I'd take profits. I don't mess around. Well, I would do this. If we didn't get the breakout today on a closing basis, I would take profits at the end of the day because we are threatening a major breakout above the November and December high. We've made a big run off the recent low. Let's see, I don't have the RSI. My assumption is that we're probably overbought or getting close to overbought. So I think that we got a nice uptrend, but I want to respect that overhead resistance. So I would take profits. But again, it is one of the stronger stocks within this space. So you can take some solace in that. But to the downside, I would not want to lose that rising 20-day. So if you do hold and we fail to make the breakout, if we come back down and fail to hold that 20, I'd be careful because you are in a group that's underperforming the S&P.
All right. Let's see. For our Canadian friends, Bank of Montreal, BMO.
Well, key support, I think, is pretty clear at around $74. I think that there are other banks out there that are better. I'm going to say we're in a trading range, pretty tight one right now, between 74 and 77. As Treasury yields continue to rise, my guess is we're going to get a breakout in Bank of Montreal, as I'm expecting to see across all the banks, many of the banks. But, it's an okay performer. Banks in general, and I mentioned this at the top of the show, I'm a little surprised they haven't done better with the yields moving higher, especially in the month of April. We've seen a little bit of movement to the upside in the banks, but we've had a huge move higher in Treasury yields. So that's a little surprising. I expect that we will see some catch up. Bank of Montreal did show a little bit of relative strength in March. You can see the overall trend here has been lower, and versus the S&P, it's not performing particularly well. And banks, as I said, given the fundamentals and the Treasury yields, I'm really surprised banks have not been performing better. But I think there are other opportunities within the banks. I like others but much better than Bank of Montreal. But if you own this one and you're looking for something technical that's bullish, you want to see volume continue to be strong like it has been recently, and let's get through $77.
All right. And our final one, the 10th one, is going to be X, U.S. Steel.
Yeah, I believe USX reported. I did not write down their results, but obviously the market's not particularly pleased. This could be a head and shoulder breakdown, so you want to see where we close today. It could just be a false breakdown, but what I'm seeing is an uptrend, and then you've got the left side of the, well, here's your left shoulder, here's the left side of the neckline, the head, right side of the neckline comes back up, pretty weak putting in the right shoulder. Let's see how it goes from here, but the way I would annotate it is just like that. And you can see earlier on very heavy volume, we were clearly breaking down, but we are trying to rally off of that recent low today. Let's see if we can hold $34. If we can hold 34, I give this one a little bit of hope. I think if we close below, if we close where we are now or lower today, I think we're going to follow it up with more weakness in the near term. So kind of a mixed picture here, but I'm not bearish. I know you were saying you're bearish, and I know Carl's been bearish. I'm on the other side. I think we're in a correction, so I'm still looking at bullish. I still look at charts maybe with rose-colored glasses on, if you will, but I'm looking for bullish patterns to evolve and false breakdowns as opposed to trading something on a bearish basis. So I think X will hold, but if it doesn't, I certainly would respect this breakdown.
There you go. And with that, that is our 10 stocks in 10 minutes, just about. And we have the summary chart coming up here for you. There we are. I will try and get all of these symbols up into the Market Watchers Live chart list. You can find that. Just go to the blogs tab, click on the Market Watchers Live blog, and you will find the link to the chart list at the top of that page. But there are also links within every Market Watchers Live recap article. So you can go there if you want to steal one of Tom's charts, those relative charts, very easy. Just click on the chart and add it to your own chart list, and there you go. And with that, it is time to talk about August. It is going to be a great August because we have ChartCon coming up 2018. This is our every other year convention, basically, for chartists. And we used to do them where everybody would come to Seattle. But the last time we did it in 2016, we did it as an online conference. And it was so very successful. And we were able to reach so many more people that we decided that we're going to continue that way. So you can go to ChartCon 2018. You don't actually have to go to Seattle in order to do that. And we have a great subject to study, reducing risk. That is something we all need to know and act on. And I think, I don't know, Tom, I think every survey we get, people are asking us how to set the stops. How do you, reduce your risk? How do you determine risk reward? All of these types of things we're going to talk about at ChartCon 2018. We have amazing speakers lined up for you. I'm always quoting Dr. Elder, and he's going to be there. I can't wait to talk to him again. Among others, Tom McClellan, of course, Greg Schnell, Greg Morris. It's going to be great. And we do have the schedule below here, so you can see who's going to be talking and when they'll be talking. Each presentation is about an hour, and you will get to keep all of those presentations for review later. So you can do similarly what we have on StockCharts TV. You've seen the various clips we've taken from 2016 and put on there, but you will have all of those for 2018. And no, there are no plans to put the 2018 ChartCon presentations on StockCharts TV. So if you want to wait for that to happen, you might be waiting for nothing, because we haven't, we're likely not going to replay it. And if we do, it'll be a long time down the road. You want to register now? We're doing our early bird pricing, and it ends next week, I think, or the end of next week or into the following. So you want to go ahead and get that get in there right now before we lose that early bird price. And that's pretty much what I wanted to talk to you about as far as ChartCon. And again, you can get there stockcharts.com/ChartCon, and that will bring you right there.
And you mentioned, minimizing risk with your stops and so forth. And I agree with you. That is probably one of the hottest topics, when to sell, just in general, when to sell. And of course, one of the times to sell is when your stop's violated. So if you don't have a stop in play, you should be thinking about one. And as I went down and looked at the agenda on day one, of course, Chip and Grayson will kick off ChartCon, but the next 3 presentations you can look at right there. Greg is going to be talking about minimizing risk with tight stops. And then you got Dr. Alexander Elder using market volatility for placing stops and reducing risk. And then Bruce Fraser, who's going to be in next week with us, using Wyckoff methods for better trade entry and tighter stops. So this is something that, there's a reason why all of these experts are talking about tighter stops, because you have to use stops. You have to minimize those losses to the downside. That is what makes trading work. If you just allow your losses to, continue to grow on individual trades, it's really difficult to make money trading. I mean, I have found out that, again, and John Hopkins from Earnings Beats has been on here many times, and we talk about this all the time about being able to minimize and contain those losses to the downside. You actually can be much less successful than you might think. It's really about containing the losses when you do have them. So again, you can see on the schedule for ChartCon, a number of presentations are specifically designed to help you with setting stops.
Indeed. Can't miss it. So go ahead and sign up to go attend it. You can attend it live. You can watch the presentations as we do them, but it's very similar to how this works on StockCharts TV. You can go back. You don't have to be sitting at your computer all weekend. So hopefully you'll join us for that. And I'm going to move on now to our final market update. And let me get ourselves to Candle Glance. Here we go. And I'm going to use the 2-day chart. This is I believe, a 1-minute or 10-minute bar chart, and take a peek at what's been going on. So it looks like the markets are making a bit of a resurgence. We started on the positive side here for the Dow, but we spent most of the day below deck, and now we're finally poking our head up above yesterday's close. So we're now seeing positive movement from the S&P 500, from the NASDAQ. The Russell 2000 is just barely ticked up into positive territory. Wilshire 5000 also rising. We can see Treasury yields on their way down, currently reading at 2.96. We have UUP mostly unchanged. It did have a nice little pop in the morning, but it came back down and has been consolidating at mostly no change, currently 2407. Commodities mostly unchanged. We can see USO spent most of the day on the negative side, but did make a resurgence here. It is still down, but only down 1 cent at 13.76 for USO. 125.31 for GLD. Nice gap up and now consolidating sideways. And we can see that the VIX is still traveling lower. Investors are starting to get more comfortable with the market, and I'll be talking about that more with sentiment coming up here. So with that, let's see, we're going to go over to the market summary, and let's look at which are moving the most right now as far as our industry groups go. And there we go. At this point, airlines, REITs, utilities, all of these are leading the market, with REITs and airlines actually up over 1.5% currently. The big laggard, disk drives, down over 1.5%. International ETFs, India and South Korea are leading. The India ETF is up well over 2% right now. And we can see Italy and Japan, as well as the UK ETF, all in the negative space, with Italy down a little bit over 0.5% right now. And with that, I'm going to conclude the market update and move on into our decision point sentiment report. So I'm going to go over with you all of the various sentiment charts that I follow. I would ask that you go ahead and take the poll that's currently running in the chat room. Let us know what you think is going to happen between now and the end of the next week. Will the market end up? Will it end lower, or will it end mostly unchanged for next week? So go ahead and take that poll. We'll take a look at it at the end of this particular segment. And let me grab that screen. There we are. We've got to get over here to Safari. All right. So again, that I did, somebody asked in the chat room, I have already written a blog about PMO screens for a few dogs. Let's go ahead now. I want to go into our sentiment indicators. Now, if you want to get most of these sentiment charts, they are part of the Decision Point chart list, free chart lists that you can download. You just would go up here to your account, manage chart packs right here, and click that. And the Decision Point chart packs are free, but you'll find the sentiment indicators in the, I believe it's the market indicators chart pack. So that's where you'll find the sentiment charts. And then, of course, anytime any of us do an article on any chart that you're interested in, all you have to do is click on that chart and you'll be able to get the live version and save it, or at least look at the settings so that you can do that for yourself. So anyway, let's get started. I want to look at the put call ratios right now. And a reminder that sentiment is contrarian. So we look to find bullish activity, investors feeling bullish, like the VIX getting lower, like I just talked about in the market update. We're waiting to see investors get very bullish. If they get very bullish, that's bad for the market. And what I'm seeing is a lot of people getting much more comfortable with the volatility and the weakness that we're seeing in the market right now. And that's not good for the market, ultimately. It's kind of interesting, Tom, right now, because we are sitting kind of on different sides of that fence as far as bullish and bearish. So it should make for some interesting programs as we continue through. All right, so let's see here. We've got the put call ratios are now starting to decline, okay? And that means that we are getting more investors, low readings mean that investors are getting more bullish. We're actually starting to get close to what I would call oversold territory for these particular readings. And when you see those bottoms, when you see those very low readings, and I've marked a few here, they generally precede down move or consolidation like we saw here. I mean, we were in the middle of a parabolic move here, so at least it was calling out these small declines. But notice it came in before the big decline. So I'm very curious to see what will happen. As you can see, these were tops. So that came in where you want it. Everybody's getting very bearish. That's time to look for a rally. And that's indeed what happened. So right now we're seeing these readings falling lower, starting to get into oversold territory, and that's not good for the market. That's bearish for the market. The next one we're going to look at is the American Association of Individual Investors. This is a poll that they do on their website at aaii.org, I believe. And you can go there and click and do like you just did, hopefully, in the chat room, take the poll, and then you'll get to your part of the reading here. So this is just anybody pretty much who goes to their website and they click, I'm a bull, I'm a bear, or I am neutral. And so I follow how many votes happen, you know, where we're getting the percentages. And right now what I am seeing is bullish activity here. We can see a breakout here on an increase in the bullish sentiment. We can see that bearish sentiment is really starting to pare back. And we're starting to see, I'm going to say, elevated readings on the bull-bear ratio. I think we need to see much higher ratio before I get really concerned. As you can see, we had highest readings we'd seen on these ratios for quite some time that came in before our decline. So I'm looking for really a more climactic reading on the bull bear ratio, but I think this is important to take away right now, is that there's an increase in bullish sentiment. We're not overbought. We're not, we're not at the top of the range. Let's put it that way. So there's still room for people to get more bullish, but the idea here is that we are certainly moving more so to investors getting more bullish. Now we're going to look at the National Association of Active Investment Managers, and they report how exposed they are to the market. And so we watch for these big moves where they're very exposed, because typically when that finishes, you are going to see a downside, because that means they're bullish. If they're laying out lots of money in exposure, that is a sign to stop and listen and look. Look at the last time. This was the highest reading we had seen. I think it's the highest reading that since we've been taking these readings into account, the highest reading we had ever seen on exposure for active investment managers for big money. And it came in, granted, there was quite a bit of rally they got to take advantage of, but that did come in before this very bad decline. So that's why I keep an eye on some of these sentiment numbers, and that's why I report them to you every week, because they do tell you some interesting information. And while it might not be information that's actionable necessarily, it's one more piece in giving you the big picture. And I talked a lot about that in analysis paralysis. You want to look and understand the big picture and then work your way down before you get to those individual investments. So I think understanding sentiment and where it is important. So right now we're seeing it's pulled back, exposure pulled back somewhat. But overall, when I look at this reading, we're pretty much in an average zone. We're not seeing anything they're not too exposed, but they're not exposed to a huge decrease in that exposure, because that's, again, when they decrease to these lows, that's going to precede an uptrend. They're very bearish, and that means that it's good for the market, and you can see where it came off of that. So sentiment, very important piece to the puzzle. So that's what we're seeing as far as exposure. Finally, I'm going to show you the RIDEX asset analysis chart. Guggenheim has some RIDEX, has funds that were managed by RIDEX. They've taken those in, but we've kept the name so that we can give you the RIDEX ratio. But I wanted you to understand that what RIDEX did is they had a basket of funds. They had bear and index funds, and then they had bull and sector funds. And they would report the number of assets in those areas, those funds. And they also would tell us the assets that are in their money markets. So it's a really great way to see where the actual money is flowing, so that you're not just getting a survey like you're going to, like you're taking where you just, I'm bullish or I'm bearish. This is telling you what is happening in actual money. So what I was noticing is that at this point, we are seeing a rise in the equity funds. That means we're seeing money getting in there. Overall, money market funds are trending a bit lower. And I know last week someone was asking me, well, why are assets leaving money markets, but they're not going into the bear funds or into the bull funds? And I suggested that that we might have been seeing a lot of people pulling money out to pay their taxes, to be perfectly honest. I know I had to do that. So that could have been an explanation there. But what I want to show you here is just that we're seeing that decrease in the bear funds. We're seeing a decrease in the money markets and an increase in equities. So our investors are getting more bullish. We're seeing low readings here on the amount of assets in the bear funds, and we're seeing lower, money is coming out of the money markets. People aren't necessarily moving into cash. So I will give you the roundup of what we're seeing, and then let's go ahead and look at the poll. I don't know which is easier for you to bring up, Zach, but either the poll or or my summary slide. So in summary, and this will be in the Market Watchers live recap. So if you want to go back, you'll find it there. But we are seeing that put call ratios moving lower, and they're near oversold, and that is bearish for the market. Increasing bulls, decreasing bears as far as AAII, and somewhat elevated ratio, which is somewhat bearish for the market. The big money managers are pulling back exposure, and the readings are now pretty much in neutral. So I'm reading that as neutral for the market. The RIDEX ratio, we're seeing a decrease in the cash and bear funds, and they're actually getting oversold, and rising equities. And I think that's very bearish for the market, mainly because we're seeing oversold readings in the bear funds and cash. Finally, in conclusion, sentiment is bullish among these market participants. And to me, that's very bearish for the market. So very bullish people means very bearish market. So that's what I had for you for sentiment. And let's take a look at that poll. So what I'm going to be doing is the Wall Street sentiment survey. Mark Young, he's been here as a guest, I think a couple times. We report not only Tom and I report whether bulls or bears for the next week, but I also give him the numbers from this particular poll. So be sure and take it. And as you can see, we have a preponderance of bulls, and that's somewhat bearish for the market. So I would say that we're certainly looking at more bullish thoughts among participants. So, and with that, I'm going to pass it back to you, Tom. It's time to wrap this whole thing up.
Yeah, I do like the fact that the Nasdaq's bouncing off the rising 20-hour EMA. I think it is, at least for now, in what appears to be the start of a short-term uptrend, and it's occurring right as we get close to the end of the month, where we tend to see some window dressing, and then the beginning of the month where we do see new money rotating into the market. So I am among those that believe we're going higher this coming week, but we'll see.
All right, I'll put you down as a bull.
Put me down.
All righty. I'm going in as a bear. So we're taking opposite stances. We'll see what happens for the week at the end of the week.
Yep, and we got a huge week coming up next week. Got a couple of really big guests and
absolutely
special things, segments.
Special segments, yes. You're going to be doing that seasonality report, so we know what to expect for May. I'm going to go over what happened in April on the monthly charts. Tom McClellan is here. Bruce Frazier is going to be here next week. No shows that you want to miss for sure.
That is for sure. One quick note, we do have the Dow Jones currently up about 8.5 points today. Not exactly a huge day, but considering we were down over 100 earlier, it's nice to see that we're back in positive territory. The NASDAQ, which has been all over the place, especially at the open, we had that huge move higher on the heels of some great earnings that came out overnight from Microsoft, Amazon, Intel, Baidu, not so much from Starbucks. And I was kind of surprised, as I mentioned yesterday. I thought Starbucks might see a pop. Not that it's a horrible looking chart long term, but we didn't get that immediate pop on Starbucks. But still, we did get a lot of strength at the open, and all of that strength turned sour pretty quickly. We went just below 7,100, and now we've rallied back up above that 7,100 level, and currently the NASDAQ is up about 3 points. So we'll see whether or not we can hold that into the close. But we got a great week next week, as Aaron just went over. Can't wait to get into that. But first, of course, we have the weekend coming up. I think it's good for everybody to get away and kind of recharge the battery before we get going next week. I do want to thank everybody for stopping by and joining us today. Please remember to complete the survey as you exit. We really do like to get your responses and see what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Come back here and join us on Monday. Be safe this weekend, and we'll see you then. Happy trading, everybody.